Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Wipro's third quarter earnings meet estimates. The company now guides for a 0 to 2% sequential growth for the fourth quarter. The Bombay High Court refuses to give interim relief to TV broadcasters on the TRAI order that capped the price of pay channels and the number of channels in a bouquet. Oil prices fall to the lowest levels in a month as tensions in the Middle East ebb. And the US will not cut tariffs on Chinese goods any further until the presidential election in November. Duty relief will depend on China's compliance with the Phase 1 deal to be signed today. And I think that piece of news which came out in the US markets, during the US market trade, they pulled back the enthusiasm in those markets. So if you just look at the headline numbers, they look pretty flat. I think they just came off a little bit from the levels that they were trading at. So almost a flattish close for the US markets. No big gyrations out there. A fair number of gyrations between what's happening to the intraday levels, to the different currency levels as well, to the valuations and all of that. And a couple of pretty interesting charts on the Bloomberg terminal that I want to highlight before I talk about some of the other things. This is the dollar yen, which is rising to test a long-term downtrend, and it's an important indicator of what could happen to the currency, because the dollar yen would be the arguably the most traded currency, and the dollar weakness or the dollar strength would first reflect here. Two, while everybody's talking about the return to value, and we're seeing a bit of that in the Indian markets too. The last 7 days and the week gone by actually saw growth stocks put in the highest outperformance in the US markets over the last 6 or 7 years. So the dependence on quality may not go away. We might have this trade deal, and until then, the momentum coming back to value. Post that settling down, if there is no big other news, then you might well have a return to growth yet again. At least that's what this last week's performance seemed to be. It may be sporadic, it may be erratic, but it certainly showed the best performance over the last 6 to 7 years, I think since 2012. However, while the long term is one thing, the short term indicates that there is a flat start in the session today. The US futures have slipped a bit as well, and that's showing in the way the Asian screen is behaving right now, because the Nikkei is down about 1/3%. Shanghai is down about 0.8%. The SGX Nifty points to a start which could be marginally in the red as well. So it could be an interesting morning of the session today. Are we looking at the markets having bought the rumor or the news flow surrounding the event and selling the event? That's the key question, I think, that most people would be grappling with. Well, I personally believe that it's difficult to see major short positions getting created in the build-up to this deal. So even if there is a sell the news kind of or sell the event thing, it may not happen today, it may happen tomorrow. I somehow believe that it will be very difficult to create some major short positions. But dealers that I spoke to post-market hours yesterday, who's speaking about flows, said that maybe, just maybe, select FMCG names which have rallied quite a bit in the Indian markets might actually see a bit of profit booking today. So you've got to probably look at that as well. So watch out for the market picture. That is the most important thing. Now, before we get to specific stocks, I think it's important to talk about the market picture with James Glassman. He's Managing Director and Head Economist Commercial Banking at JP Morgan Chase. Joins us on the phone line from New York. James, good evening to you. Thanks so much for taking our call.
Yeah, good morning.
The news that has come out during the US market hours yesterday, wherein I think it was mentioned that while this deal is being inked, no further relaxations might be coming in. Do you see this as an expected piece of news, or do you think that this might lead, not spook the markets, but disappoint the markets a little bit?
You know, I think the market had low expectations for the next round anyway. And I think people thought that the next round is a little more difficult. And we've got an election coming up, and nobody wants, that's going to delay the whole thing. So I don't think this is new news to the market. It didn't seem to react much to it.
Do you believe, James, that the markets may position itself for precisely this? Since the 1st of January, we know that Jan 15 was this big deal signing coming up. Donald Trump had tweeted about it a number of times. So the market has built the event into its fold. And now with no news coming in, there might well be a sell the event kind of scenario as well?
Could be. I think the market figured this out back in December when the Trump administration said no tariffs on December 15, and they rolled back half of the ones that were put in September 1st. I think everybody figured, okay, this first round is settled. I don't think there's any expectation for the next round anytime soon. So I don't know. I think for some time the market has figured out that this thing, China-U.S., the tension over this is going to be fading. And so I don't think I think right now just having it off the table is a positive thing. I don't think it's hard to imagine that we're going to be greatly disappointed if it turns out that the next round of negotiations goes nowhere. I think the bigger worry in the market's mind has always been, okay, when this is passed, what's going to happen with the U.S.-European issues? It's a different animal, but I think that has always been the bigger worry in the background.
Yeah, well, maybe you make a valid point that some of this news flow is already known, so just getting it off the table is great. Just one last question then, James, because let's not talk too much about it until it finally happens. One thing that we can speak about is what the quarter might dish out. So one is what the trade deal does. Two is what the earnings season does. Do you believe, in your wisdom, that the earnings season in any fashion could shape what the U.S. markets do over the ensuing 3 or 4 weeks?
Yeah, for the next 6 months, it's hard to believe that earnings are going to continue to surprise because we have a couple issues going on in the U.S. The Boeing's issues are going to create a lot of volatility. It's got a big footprint in the earnings side, and who knows indirectly what the impact is going to be. So, the financial sector's coming up with some good performance, but it's hard to believe that from here going forward, we're going to see continued upside surprises on earnings.
Okay, James, really appreciate you taking the time out and speaking to us this evening, your time. I much appreciate. Thanks for joining in. Well, that's the view from James Glassman of JP Morgan Chase. You've heard him a number of times, and he's a veteran of the U.S. markets. So talking about the possibilities around the trade deal, maybe no surprises and maybe no new positive surprises, but actually disappoint the market. Let's wait and watch. Just very quickly, before we get to first word, I want to run you through, while we've spoken about the broad macro, the micro as well in the session today. Keep in mind, the market, but there's been positive 7 of the night trading sessions that we've had thus far. So that's an optimistic sign for the broader markets. But there are a lot of stocks that you need to monitor in the session today. One, the key set of numbers that come out. So you'll have Sterlite Technologies, L&T Infotech, Tinplate. There are a few numbers that you've got to monitor in the session today amongst the important ones. Watch out for L&T Infotech as well. And Sterlite Tech had a big spike in trade yesterday, so that could be an interesting set of numbers. But the stocks that could react at 9:15 a.m. today. Wipro could be an interesting one. The Q4, the margins were marginally under pressure, but the Q4 IT services guidance of 0.0 to about 2% sequential growth. It's a very it's a band which may not inspire too much of confidence, may not disappoint either, would depend a lot on what it does. There were a few long positions built into Wipro ahead of the numbers. I don't know if those get unwound today. Let's wait and watch. But Mindtree was an interesting one because while the stock had rallied a bit and while the top line numbers were flattish, I think the operational numbers looked very strong. There was a strong operational margin. Margin beat was due to lower salary cost as well. And the company remains confident of margin expansion over the next few quarters. So this could be an interesting one to monitor in the session today as well. Canara Bank plus Canfin Homes, because Canara Bank has called off the divestment process of the entire stake in Canfin Homes as well. Remember, they have about 30% stake in Canfin. So both of these stocks, Canara and Canfin, could be interesting names. CSB Bank, the regulatory restrictions imposed by the Reserve Bank on opening of new branches is lifted. Maybe that brings about some spurt on the stock. Last but not the least, Credit Suisse has come out with a note on MGL. On the gas sector at large, and Somit will take us through later on. But MGL was an interesting one out of that. They've initiated coverage with an outperform rating, a target price of 1280. Let's wait and watch what this one does in the session today. Okay, let's tell you what's lined up on First Word today. Agam takes us through Wipro's earnings and the sectors that performed and the ones that didn't in the third quarter for the company. Darshan explains why Lupin's back under the weather. And then Somit takes us through what some of the prominent investors bought and sold in the quarter gone by. Well, full tint on the markets today on First Word itself. Let's first start with Wipro. It reported an inline set of numbers for its IT arm. The Bengaluru headquartered company saw revenue rise a little over 2%, while operating margins also improved for the tech arm. Agam Vakil is standing by with the details. Agam, I reckon you also got a chance to speak to the management as well, offline, online. first the numbers, and then what did you make of the interaction and the commentary that they gave?
Sure. Well, I'm starting off with the numbers are absolutely in line. That means the growth as well as the outlook, which means the guidance. Well, in terms of the IT services revenues, they were bang in line with the guidance that they gave earlier in the second quarter for the third quarter. In fact, right in the midpoint of that range, we saw about a 2.2% growth in rupee revenues as well. This is, of course, the consolidated numbers, and well, profits were dipped by around 3.8%. The dip was a little less than what we were working with, but on the whole, the numbers are very much in line with expectations. Let's start by taking a look at how IT services has done. There has been an improvement. There's no doubt about that, and of course, we're looking at growth of around 2.2%, and this is in a quarter which is impacted by a lot of furloughs, because a lot of clients do go offline, for a certain period of time. Let's move on and talk about your margins as well, and there has been an improvement in margins. It moves back to the level of around 18.4%. Well, as far as your net guidance is concerned, moving on, well, we are looking at. Okay, so I'll come to the guidance, but in terms of the key verticals, BFSI has done well, reasonably well, but it's not up to expectations of a lot of, of your analysts there. Consumer business has done reasonably well, on the other hand, as has been the case for healthcare and life sciences. Technology is one of its other very large, contributors that has seen a decline of around 3%. So this is how revenues are panned out. It's been fairly in line. In terms of the guidance, and again, this is at around 0 to 2% on a sequential basis. It's been mixed, because some analysts are saying this is below their expectations. Some are suggesting this is in line. It's not something that gets you excitement. Well, this is just indicating that there has been a slowdown in a lot of the key verticals for Wipro. So that, of course, has been a positive, challenge. But coming down to your question, Neeraj, on what the management has to say, I spoke to Jatin Dalal, who's a CFO, and he seemed a tad guarded. Mm-hmm. He does acknowledge that there has been a slowdown in banking and financial. It's their biggest vertical. He has said that the digital services revenues, which rose 28%, now comprising 40% of the consolidated revenues, have picked up. But that is the only solace which is holding on to growth right now. If that wasn't there, then we would have probably seen a decline right now. So, well, and in terms of consumer spends, the client spends, we will start getting a better idea perhaps in the fourth quarter. But for now, he was guarded, and he says that for now they are looking at growth. And if they have to sacrifice their margins to a certain extent by putting in more investments, well, growth comes right at the top. So that's where the management focus is, and saying that there could be challenges up ahead.
Okay, two quick questions. One, have brokerages come out with notes on Wipro, and what is it that they are saying? Are they making material changes? No
one has made any changes on ratings. Majority of the ratings are between neutral and sell, and there are very few changes in price targets, and the upside and the downside also doesn't pertain to more than about 5 to 6%.
Okay, from current market levels. Okay, now one final question, and I know we'll do a whole review post TCS and HCL Tech coming out, but based on what Infosys and Wipro have said and done, does it give us any indication of what TCS and HCL Tech could do come Friday?
I wouldn't say the same for TCS, for HCL Tech, because it's slightly different business. But TCS, there is no doubt about the fact that it's going to face challenges when it comes to growth in the financial sector.
Okay, so BFSI remains a pain point for all the companies. TCS might not be any different.
It might not be any different, right?
Okay, let's not try and guess too much, but it's great to get this perspective about what the two big majors have done thus far, and therefore what does it do for the other two. Tech Mahindra, remember, comes 31st Jan, so that's way out. But the top four come out with the results by the end of this week, and therefore it'll be nice analyzing what all four of them have done. Agam, thanks so much for putting that into perspective. That's Wipro. Agam also spoke to the management, of course, and you can log onto our website and try and make more of that interaction, or log onto our website and try and read more about what Wipro has done as well, and try and compare Wipro and Infosys between themselves as well. or just rewind this conversation. Okay, let's move on. Lupin has had a tough time over the weekend. The pharmaceutical giant, who's a large exposure to the US market, got a rap on its knuckles from the US drug regulator. Add to that the regulatory hurdles it's been facing over the last couple of years, and there is cause for concern. Darshan is standing by to put all of that into perspective. Now, Darshan, why was this weekend particularly bad?
Yeah, so basically what happened was it was the fifth plant that again came under the regulatory scanner for but over the past 12 months. So it was a Tarapur API plant which got an OAI, which is an official action initiated, which means the US FDA says that you need to officially make some changes to the plant before we start giving you any kind of approvals from that. So now Goa, Pithampur, Mandideep, Somerset and Tarapur. So these are the 5 plants in which probably new approvals won't come in. So that's a bit of a concern for Lupin going by. Now most of these plants and the issue if the US FDA comes in, it's the issue with the US markets. Now it's 31% of the top line for Lupin comes in from the North American market. India is also 31%. So India is doing well, but a lot of that cash is now flowing into the US market's growth, but that is not coming in. So and the US market is shrinking for them given the fact that there is competition and price control, and we'll come to the products later. But nevertheless, US remains a large market for Lupin, and because of issues on their plants, they're not able to grow there because their old products are not seeing traction and the new approvals are not coming in. Now, what has the management said? We spoke to them. I spoke to Nilesh Gupta in September, and he said that the Goa and Somerset facility will be ready for re-inspection by FY20 end, and the second one, he said, Pithampur and Mandideep will be ready for inspection in the first quarter. So at least for the next 5-6 months, probably new approvals won't come in. And he said the same thing post the earnings conference call that he did in November. So that's what he said. But analysts are a little concerned at this point of time. Couple of notes that also came out after the Tarapur API OAI. First of all, Macquarie is saying is that now a serious relook at the regulatory readiness is warranted for Lupin, and no big ticket opportunities in the near term to medium term, which puts a serious pressure on the financials of the company. Even Nomura is a little disappointed. They're saying they're disappointed with the inability of Lupin to address the US FDA concern, and now they're concerned of the system processes at the site and the leadership process at Lupin. So that is something that even Kotak is saying that there is a case for system-wide remediation, because this plant only had 3 observations, but nevertheless, given that 4 other plants had issues, US FDA went ahead and said, it's a system-wide issue with most of your plants, and that needs to be remediated. Now, US sales are falling for Lupin. If you look at what's happened from a high of almost $1,100 million in FY17, it's come down to $820 million because the US market is not growing. So there are concerns, and that is a big concern for Lupin. And with these issues currently there with the plant, that number could probably come down further if the new approvals don't come in and if the ramp up in certain of the existing products don't come in. Now, what are the concerns? There are 3 key products that Lupin has. First of all, it's a drug called ProAir, which is an inhaler for which they need approval. They have received a complete response letter from the US FDA, and that is what the management told me when I interviewed him in September. So that is not coming in. Levo, there is a capacity constraint. They are trying to get that up. That will take a few more months, but there is capacity constraint. And Solosec, which is a key women's drug that they have launched, it's continuing to struggle. They're not getting the right traction that they had hoped for, and that is a big concern for them. Because look at what some of the brokerages have said. CLSA is saying that the 70 to 80% of the incremental growth will come in from these 3 products, and there are concerns in these 3 products, and they've cut the EPS estimates on low US sales and slow ramp up of Solosec. So that is something that CLS is saying. Even Jefferies is saying that earning revival is almost 6 months away for Lupin, and now depends on select drugs. So if the approval for ProAir probably comes in, that will be good. And they're saying that the domestic cash flow business is used to fund investment in the US, which is not growing, which I told you earlier on. Now, brokerages obviously are very divided on Lupin at this point of time. It's half-half. as far as the buy and sell is concerned, and some of them do also have an hold. But if you look at the Bloomberg consensus estimate, the return potential, even after being down almost 50 to 60% from the all-time high, is just 0.7%. 19 have a buy, 18 have a sell, and the number of sell recommendations have gone up significantly for Lupin. So there seems to be a concern. People were already concerned with the 4 plants. Now with the 5th plant coming in, the concern even gets aggravated for Lupin.
Okay, just 2 quick questions, Darshan. One, so Lupin is having his issues.
Yeah.
Are there other companies which have had a series of such issues but have come out or tried to come out successfully in a much better fashion than Lupin has? Because the notes seem to suggest that Lupin as a company-wide problem, they are not able to address it. Surely not all companies are doing that.
So there is Aurobindo also pretty much which is in the same boat because a lot of their plants are under regulatory scanner. One company which came out of trouble and again got back into trouble was Cadila Healthcare, because Moraiya was a big plant for them that they came out successfully and then they managed to outperform, and again they got issues in the same plant. So that is where they came out. I think Sun in terms of regulatory has done extremely well. They had a lot of issue with their plant. Halol was a big issue and the stock actually corrected 50% on that, but they managed to come out. The recent inspection also, the issues have not been addressed. The FDA verdict is not out yet, but if you see the 483, it seems that it's not serious. So I think Sun is something. Sun is one company which has actually managed to come out of the US FDA issues in a much better fashion. I think people are now awaiting what will happen to Cipla's Goa plant, because that has been speculated whether that will get an OAI. Majority of the street does believe it will get an OAI, which will not be very, very good, but it's not a very big plant. But somehow I think best placed right now in regulatory issues, I think will be Sun Pharma.
Okay, just one quick follow-up. Lupin, after cracking so much, also doesn't have return potential. If you remember, which of the pharma companies have the best return potential as per the terminal? Any 1 or 2 names? That
I don't know at this point of time, but I think DV's has done extremely well. I was speaking to you, I was rather surprised when I was looking at the second largest company by market capitalization. So that is where a lot of traction is, but the others I haven't checked, so I don't know.
Okay, yeah, but it'll be interesting to figure out. The Lupin, after cracking so much, also doesn't have return potential, and it's probably now known that why this might be happening, because they're getting these USFD issues one after the other. But great piece, Darshan. Thanks so much for putting that into perspective. And again, I remind our viewers, a story around this would be on our website, so you can hear this out here, or you can read the story on our website, BloombergQuint.com. The last piece on First Word today, the gap between the mid-cap and the large-cap companies was perhaps the highest in the last 3 months of 2019. And some of the largest investors used this very opportunity to buy or pair some of the holdings in the small and the mid-cap space. Sumit Sarkar's collated the top buys and sells by prominent investors in the 3rd quarter. Sumit, good morning.
Good morning. So this is based on the disclosures that have so far come on the exchanges, and so this is not the entire portfolio, but based on changes in the recent disclosure. Starting off with Radhakishan Damani, so he has cut his stake in its own company, that is Avenue Supermarts, but it's a marginal cut that we have seen, and this could be largely because of the regulatory requirement that is there. But in India Cement, he has hiked stake to 4.73% from earlier mere 1.3%. Also, VST Industries is a fresh buy, or he has increased stake above 1% in the December ended quarter. Now, along with this, Mr. Damani has also transferred stake in Advani Hotels to his relative Gopi Kishan Daman. That is a transfer of nearly 4.18% stake in Advani Hotels and Resort. Now, going on to Rakesh and Rekha Jhunjhunwala. Now, they have largely cut stake marginally, but in these 3 companies, that is Federal Bank, First Source Solution, and in Orient Cement. In Federal Bank, he has reduced stake to 2.9%, in First Source Solution to 2.78%, and in Orient Cements to around 1.17% from 1.22% in the earlier quarter, that is the September ended quarter. Now, for Ashish Kacholia, if you see, Birla Soft and Poshak are fresh buys, or he has increased stake in these 2 companies above 1% in the December ended quarter. In Vaibhav Global, Apollo Pipes, he has increased stake in Apollo Pipes. He has taken his stake to around 3.52% from earlier 2%, while in Vaibhav Global, he has increased stake to 1.55% from earlier 1.48%, while in GHCL and Haikel, he has cut stake in the December ended quarter. Now, the Chennai-based investor, that is Rajiv Khanna, who invests in the name of his wife Dolly Khanna, now he has seen fresh interest or has increased stake in 2 of these companies, that is Muthoot Capital and Butterfly Gandhimathi, where his current holding is close close to 1.13% and 1.1% in Butterfly Gandhimati. While in Nossel, which is the chemical company, and he has been holding stake in this company for a very long time, has cut its stake in this company to 1.83% from earlier 1.93%. Now for Akash Bansali, only one change. He has either sold his entire stake in Barlampur Chini or it has come down below 1% in the December ended quarter. Earlier he used to have close to 1.86% stake in this company. Now for Vijay Kedia, fresh buys in Newland Lab, or he has increased his stake above 1%. Current his holding is close to 1.94%, while some marginal stake hike we have seen in Vaibhav Global. And lastly, Mukul Agarwal, he has paid stake in Shaili Engineering and Vardhman Special Steels, while he has hiked stake in V-Mart Retail. Now he has increased stake in V-Mart Retail by around 10 basis points to 1.48%, while in Shaili Engineering he has cut stake by around 30 basis points to 3.5%, and in Vardhman Special Steels he has cut his stake to 1.24%. Now this is based on the disclosures that have so far come on the exchanges.
From September to December holding that have come out, and then a few other things that have happened, like I think Mukul and Ashish yesterday or day before hiked stake in Religare, if I'm not wrong, as per the reported numbers, and therefore that stock too was active. But a lot, as Somit said, a lot of stocks in which there has been activity from HNIs in the mid caps and small caps, either to pair the stake or to realign their portfolios. We wouldn't know what, but we at least can bring you what these guys are doing. Somit, thanks so much for putting that into perspective. Well, again, as I keep on saying, stories around most of the things that we do would be there on our website, BloombergQuint.com. Do try and read more about these. If you're intrigued by those SMSs that you get that this investor has bought this and bought that, well, we now have compiled the whole data on our website. That's all that we have on First Word today, though. But lots more lined up on Indian Open. Sanjay Dutt of Quantum Securities joins in to speak about where he finds value in the Indian markets. And then we get a big market voice, CLSA's Chief Strategist Asian Moad Johnson, to speak about the preferred markets or markets where he's betting on. Take a break, come back with more.